Hey, everybody, welcome back. This is one of our second or third edition of our 10-week series with Miss Alyssa Glutz, aka Color My Credit on TikTok. If you haven't followed her yet, you are doing yourself a major disservice. We're going to be talking about kind of these 1% down, low down payment programs. Are they good? Are they bad? Which ones should you use? Which ones you should totally disagree with and go away? But Alyssa's going to walk us through this piece by piece. And so, Alyssa Glutz, the one and only, welcome back, my friend. How are you?
I'm great, Greg. Thank you. I'm so happy to be here again. This has been kind of fun to do, just this different series that we've been doing here. And it's been, we talked a little bit before the show started, a little bit about the kind of stress going on just behind the scenes in the industry. Every day we wake up to 10, newspapers showing us that something like the world's going down, somehow, and we're always trying to okay, I'm like the worst salesman in the world sometimes because I can be like, yeah, I don't think you should do that. I don't think you should buy a house right now. Nah, I don't think you should. I think you should cancel that contract. You know what I mean?
Yeah.
But we want, in the end, we want people to make good decisions. Can you always guess exactly what's going to happen? We know now. No. You can't. I mean, even the best economists in the world that we follow can't get it right. And it's not their fault. It's just we're in unprecedented times, I guess is the word, right? So what do we do for the low down payment options? We just saw that Zillow came out with their, it's funny. You always got to read the fine print. It's like Zillow 1% down program. And I start seeing it on the TikToker and everywhere. And then you realize that it was only launched to Arizona. You don't even like one state, and then you get into it further and you go, oh, that's something that every lender out there has had an opportunity to do. We've all had 1% down programs. We have 0% down programs. I mean, it's just right now they're trying to find as many ways to get people interested. The rates are high. So what do we do? What do we do about that? So there's lots of different options. The 1% down program, I want to kind of point out a couple things that people sometimes don't know. First of all, I wish they would be very transparent on some of these programs, because when they say, 3% down and only 1% is required from you, and then you get 2%, like as a grant from the bank. Couple big things in order to do that is to, one, know, is there a maximum cap on what that grant amount is? 2%, really? But 2% of what, right? Because 2% of a $250,000 house, that's $5,000. But 2% of $1 million house, you think they're giving 2% on $1 million house? No.
Probably not.
So it's kind of important to understand, what is that equivalent to? Okay. Because what if it's 2% of my sales price, up to what? Up to what sales price, right? So a lot of the programs out there, they cap it at about 5,000. Some of them have 7,000. But when you think about 5,000, so that means that's a $250,000 house that's actually true on, that they're giving you a 2% grant. 2% of 250,000 is $5,000. That's the cap. So if the house was 300,000, it's not a 2% grant. You see what I'm saying? Because that is going to be, that would be $6,000. The cap on the amount of the gift is 5. So it's not technically going to turn into 2%.
So forgive me, but isn't that misleading and bad information? But they classify it as marketing or whatever else.
It's the fine print. I mean, here's another big one. There's a company called, and I like them very much, Movement, but they have a Move, 1% program. I get calls from agents all the time. Like, how does this compare? And it's a great program, just like the rest. Here's a little detail. You can't have more than 200% payment shock. So that means you got to have 12 months verified rent. Okay, now let's say your rent is $1,400 a month. That means the cap, the absolute max your house payment is going to be able to be on the house that you're going to buy through that program is $2,800. That's the most your house payment, the new house payment, is going to be allowed.
And that's all
2,800
in.
is, yeah, all in. That's taxes, insurance, and everything. And a $2,800 house right now, it's between 300 and 350,000.
So that does
That cuts
nothing for me in California.
Arizona out, California out, Florida. I mean, it really. I met with some underwriters last week for Guild up in Denver, and I said, just be honest with me. Who's turning loans in from across the country right now? Who's submitting loans? Who's closing loans? Because I can tell you, like, even loan officers that were mega stars doing, millions and millions and millions, they're closing one or two a month. Okay.
Really?
And they were closing 20 to 40, just, at the top of 20 to 40 are probably closing about 3 to 4 right now. That's real. And this is not all states, because what I was just saying about the underwriters is that the underwriters are like, we'll tell you, it's the Midwest. That's where the loans are coming in from that are applying for these lower down payment programs, first time homebuyer programs. But we haven't seen, we're not seeing them in California, Arizona. It's not affordable.
Right.
Okay. A lot of the programs too have caps on your income. So if your income's capped at, let's say, 70,000, okay, 70,000, okay, for somebody, if you take that divided by 12, and then you take 45% of the gross income, that's with your debts, with everything, with your car payment, your student loans, the most you're going to be able to really qualify for is about a $2,800, house payment. So that gets you 3 to 350, and that's barely getting into the market,
So is okay.
Yeah.
So as a real estate agent, not a mortgage professional, what would be a couple of the red flags I should be aware of when my client goes, "Oh my God, I found a loan that can do kashmow,"
Right.
and you're like, "Yeah, no."
Yeah. These things I would ask first, what kind of rate are they offering? Because a lot of them, I saw one this morning for Arizona. It's a 3% grant on FHA. So you end up coming up with just the 0.5%. And then you've got to get your closing costs covered, or you ask the sellers, or whatever the case. The rate was 8.625. So I went, okay. But that's Arizona. That's 8.65. That's a lot of the down payment assistance programs. It's kind of like, if you're going to come in with as little as possible, you're going to need to assume you're paying the top dollar rate, right?
Yeah.
If you want a better rate, if you want a lower rate, you're going to have more money out of pocket. I even had a suggestion. I probably shouldn't even say this because it's kind of like secrets, but some of the best loan officers in the world, in the country, are getting business done because right off the bat, they're giving their clients about 3 or 4 options of financing options. But the first option they're giving them is the most ridiculously low rate that any scum on online would offer. And they're really, and I don't offer you a 5.4% because it's 25,000 in closing cost. And I don't think that's a smart thing. But you know what? I lose the deal over that because somebody else goes, it doesn't matter. They don't care. They'll pay the 25,000 to buy the rate down to 5.4. They know it's not a good idea, but they're so tied into rate and being able to turn around to their family and friends and go, well, I got a 5.4. I don't know what you did. Well, how much did you pay for that rate? Somebody else might have got a 7%, but didn't have to pay a penny. And so the thing to think about is, how long are you going to keep that loan? Because the fact is, if you do think about refinancing, let's say in a year from now, we see the rates come down a little bit and you have an opportunity to refi, you'll never see those upfront points you paid again. Right. You won't see that money back. And so you really have to think. It's hard to take on, I've had to talk to a lot of people in the last year. Like, I know you want this 6.2, whatever, but you're going to be at 7, but the payment's only going to be this much more, but you're not going to literally, waste that money that you could hold in a side account, subsidize your payment every month until it's time to refi, and then be able to use it, to pay down the loan or use it to buy down points at that time when the rates drop a bit.
Well, it's interesting because I always tell people you can never refinance out of a higher price home. You can always refinance out of a higher interest. Mm-hmm. So what if you were to take, the property and look at use of cash, right? So it's not just I'm going to use the 25,000 as an example. Take this 25 grand. I'm going to say, whew, 6.2%. I can go to everybody to the water cooler. I have a 6.2% interest rate. Great. But let's say that bumps your payment to a 7. Was it bump it like $500?
Depends on,
With round numbers, ballpark.
It's about 1% in the interest rate difference is about $220 in the monthly payment on a house that's about a $400,000 loan amount.
Okay, so we'll just use 500. Easy numbers. So it's going to bump it up $500 a month. Like you said, you can take it into another account, subsidize it, pay it down, right? So you already have the capital. Wow. You're looking at other opportunities to put that money to work at a higher return. Because what if your cousin comes along and goes, hey, man, I got this great new opportunity to sell surfboards in Bolivia. I just need $10,000 as seed money. Here's my business plan. Here's that. He's a surfer. He's in the surfer community. He's connected. He spends a lot of time in Bolivia. You're like 10 grand and I can make my money back in 24 months. And then I get a percentage of all sales. Okay, that's a pretty damn good money plus insurance and plus interest on top. Great. Go charge him 8%, 10% on something on that. He gets his thing. You get your thing plus money in the back end versus Wells Fargo or, name a bank. Doesn't have to be Wells, of course. Instead of them taking the money, putting it away, and then go charging someone 25% on a credit card that your money just went to go pay down.
Yeah.
Which is all digital, by the way. It's never really cash. So
it's interesting you say that, though, because it is, I think differently about the whole about interest rates. Okay. I see people getting so caught up with like thinking so much about the interest rate and not thinking about that total cost, like I said, or they'll look at something and go, I have a 3% interest rate on my mortgage. I'm not going to refinance that. Are you crazy? I'm not going to go to 6. Like, I'm not doing that. But then they have a 12% rate on their car. They have a 24% rate on their credit cards. They will literally just be writing a check to rent their debt every month, just the interest payments. They're just like basically taking the money and throwing it in the air and never to see any positive coming forward because you still are going to owe the same amount, even if you're just covering those minimum payments. Anyway, it's all about like, what could we do? A lot of people right now are sitting on a lot of equity. I don't know if you know this, but 40% of first-time homebuyers in the last year, they used parents or a family member for down payment.
Big time because inflation kicked in and I've talked to a lot of Gen Zers and Gen Xers and Gen Yers. Well, Gen X, you're Gen X, but Gen Y and Z and Millennial and all the rest of those youngins. And 90% of them said like, dude, I can't afford to buy anything. Or I said, okay, so financing, I need to talk to a lender. And they're like, well, okay, my parents are going to help us with the down. Or my parents are going to put 50% down and then take a part ownership. I'm like, it's not a bad way to go. I use a company called Likely.ai. It's my brother's company. And he goes in when you buy their product and your data sheets, they'll show you what they bought it for, what their equity is, if they're homeowners, non-homeowners, what their value could be, their interest rate, all kinds of fun shit, plus a phone number and everything else. And it was funny because I had a phone call with a guy and I was talking with him this morning, actually. And he said, well, why would I sell? I said, to make money, if that's your goal. Yeah. He's like, I am making money. I have a 2.75% interest rate. And I can't sit there and be like, well, so you should really turn over and take one for the team and just help me sell that. And, you go get that 7%er. Yeah. No, I didn't. I said, well, you're probably never going to sell. Enjoy your home. Click buy, boom, moving forward. But people are stuck on that one talking point of their home rate, not car, credit card, school, bills, day-to-day expenses, fuck knows what else you got going on your debt side. But it's just interesting.
Loans, everything. Yeah,
exactly. So,
and those are going to start up like in a couple of weeks. And what's really nice? A lot of people forget about the fact that you can do a rate term refi, not a cash out, but it's called a rate term refi. So you don't have all these cash out adjustments and stuff. If you're going to roll in your student loans, like if you were not going to have them forgiven, you could combine your student loan balance with your mortgage, put it together, and you get a rate term refi, not cash out. So
That's
that means
interesting.
the rate's usually half a point to 3/4, better. Obviously the rates are still going to be high, but again, like I said, when you are looking at the fact that you have, a 750 car payment, okay, because
Mhm.
it's over 5 years and that's just what people pay. And then you
Yeah.
have a $1,200 to $1,400 mortgage payment on your $250,000 loan at 2%, right? Then you get your student loans. You got 40,000 that you're going to be making a $400 payment on monthly. So you add up
Mhm.
the 400, the 12 or 1,300 in the mortgage, the 700 that you're making, 750 on the car payment, and your outgo on these three items are like 2,500, right? You put them all together, you refi, you get one payment, it's at 1,900 a month. And
Fuck yeah.
and that you can't talk people into that because they're like, I don't want to give up my 2.75. You're like, you have more interest to write off now. You have more, and you get to write off mortgage interest. You don't get to write off your car interest. I guess it just depends on the type of the way
True.
you do your taxes and everything. But I see that quite a bit. I do see HELOCs a lot right now, which are home equity lines of credit. What's so nice about those is, you don't make a payment, you don't have a bill due unless you use it. But let's say 6 months from now, your income started declining in your employment, you lost your job, and you're sitting on 300,000 equity that you can't access unless you sell your house. Well, at
Mm.
least if you get the HELOC set up, you could get the HELOC set up. It's just sitting there. I have a credit card that's in my wallet right now that has like 300,000 available on, and it's my HELOC.
Right.
But if at any point in the future you were like, you know what, this isn't really working for us, but we could rent our house out. And between that first mortgage we have, and if we use the full HELOC, we're still going to have cash flow. We're still going to make more, but at least we can take that HELOC and go take that 100,000 and go put it down on this house. Altogether, our
Yep.
outgo is going to be the same, right?
Mm.
But you're just got to get a little bit more creative. You might need that HELOC in order to you might not even know what's coming, that in 6 months from now, your roof needs to be replaced and your AC unit. And at that point, what are you going to do? I think I'll take out my credit card, 20% interest. Number one. Number two, your score plummets because next month it shows you owe 8,000 out of 10,000 on that credit card. Last month it said you owe 20, right? So all of a sudden the score's like, shit, they're going down. The next thing that's coming is probably some 30-day lates because they're using all that's available to them. And so every month you're like, well, it's 0 interest, so I'm going to pay it down slowly. Your score's
Mm.
just plummeting. Your car insurance is calling. Hey, we're getting ready to update your premium, but your score is so low right now that your home insurance and car insurance is about to double because of that. What are you doing with your score? Because of the ex you had 15 years ago. I get it.
Ugh. Fucking exes always screwing your shit up.
And the fact is,
God.
they blind you from the fact that you owe 9,800 on your $10,000 credit card today. Your ex isn't around today. It's
No.
you. It's your fault. It's
You're
your
you're you're,
fault.
res- you're you're the one holding the bag, sweetheart. Okay. You know that I went through bankruptcy and foreclosure back in after 2008's crash because I overextended myself like every other real
Everyone.
estate agent.
Yeah.
I bought $1,050,000 home when I was 23 years old. Stupid.
Hey, you got to take
Um,
big risks. Most of the billionaires have filed bankruptcy many times in their life.
good. I got like 4 or 5 more to go then.
I'm looking good. Yeah.
The one thing that my father did to help me out, because I did some stuff to help him out, is that he put me on one of his credit card that he used for our business and just put my name on it. Gave me a card for the oh shit times in life, which I think I've used that thing like once,
Yeah.
maybe.
Yeah.
But with him making the payments because of the work we're doing in the business and my name was attached to it, you know what? I was able to bring my credit score up to like almost 750 and change.
Yeah. The
And
thing about that is just to be very careful. If there is some way for you to talk to your father, mother, whoever's got you on their authorized user card, they probably have perfect credit. Okay. In their mind, as far as the free scores that they look at, they probably in their mind think, I've never been late in my life, so I have the best there is. But what they don't know is that the second biggest thing that impacts the more industry specific scores are exactly what on the last day of your statement, what was the balance and what was the limit on the card. So if your dad was like, using it up for the business all month long, right? And then he pays it off in full on the due date every single month. And you're like, okay, cool. Well, 5 days later, the balance has now rung back up to pretty close to 50% of what was available. He doesn't have a due date for 3 more weeks, right? But at that point, it looks like he's a 50%er. So for somebody like your dad, who's never been late in his life, never had a collection, never had anything, that he could carry a 30, 50, and he could still be up in that high 7. But if you are somebody who is drowning out the bad with good, you are rebuilding, you're coming back from having some bad stuff on your credit, like you need any credit, like you need any credit card that you're an authorized user on to be like at about a 10% or less balance of the limit.
We paid that thing off. We were running 50 to 60,000 on that thing.
Yeah.
But we paid the whole thing off, and then we kept it. Our balance, our limit was still very, very high for operational uses. But
you kept the balances below like $5,000.
So freaking low, because we learned a lesson, right?
Yep.
And then we
That's
just
how
lived
you
within
do
our
it.
means and just got back to doing normal shit, like doing phone calls and everything else. But we've gotten way off the topic. We want to talk more about the down payment stuff. You and I can go on tangents all freaking day.
I know.
But so we talked about the 1%. We've talked about some of the, the fallacies that are out there, like falsehoods of saying like, well, it's 1%. Well, they've always been around, like you said, and very true. Because Zillow slaps their name on it doesn't mean that it's something revolutionary, people.
It's still going to have some details about it that you're still going to have to fit into this box of income, of house prices, of all of those things. And there are some really low down payment programs and everything. But yeah, it's just good to know that there's a few more hoops to jump through.
Ow, sorry, my back is killing me. All right, so let's talk about some other programs that we should all be aware of, because there are a lot of potholes we all step in, and we want to eliminate and fill in those potholes for our clients. So what's something else that we should probably be aware of when working with our buyers in this mortgage market?
Well, the big thing is a lot of people that do own homes right now, they think because they have a lot of equity in their home and they're going to be putting down a lot of money on a future home that, maybe it's contingent on their home selling and they're looking at this new one. And I'm giving you an example here. I have a friend I've known since second grade who contacted me and said, hey, do you know anybody in this state? And I said, I'm licensed there, And as I started looking over everything, she had mentioned like that somebody, the builder's lender had said, you might have a little bit of a problem because you had some mortgage lates. And then when I looked on it, it was more than that. It was that it went to like 120 days, but they pulled it back and they got it up. But there hadn't been a full year of perfect mortgage history. Now, I know you got a house to sell. I know you're going to have a huge down payment, but you're going to get hosed. Like if you don't wait, that at least you not only just making the mortgage payment for 12 months on time, they didn't have anything else from a credit perspective that demonstrated discipline. So it's super important that they didn't have an open credit card. They didn't have a car payment. It was just like they had a couple charge-offs from the past and they had their mortgage, and they're like, well, we didn't want to open a credit card. We didn't want to look like we were opening accounts. I'm like, you have to use these accounts almost like jobs on a resume. You have to use them to demonstrate discipline. That every month you could have borrowed $200 on this secured credit card. You borrowed 20. You didn't, it's not zero. You didn't just put it in the drawer, So like I said, it's super important for people to remember, especially on these like first time home buyer, low down payment programs. You still have to get your loan through this automated underwriting system. And they're looking at your loan from many different risk perspectives. So it's not just credit. Okay, then they're looking at debt ratio. They're looking at, are all the funds that you're providing for this, are they all gift? Nothing is coming really from you. It's kind of like if somebody's got a really high debt ratio, but they also have a really high credit score, and they really demonstrate that their income that they're presenting is very reliable. It's been going on for a while. We're not just trying to push the new overtime income they've been getting in the last 2 weeks. Like, this looks stable. They just went through some bumps. You know, that's the type of loan you can get usually through with FHA. Okay. But a lot of these programs are conventional. A lot of these 1% down programs, they're based on a 3% conventional program. And like I said, the bank giving 2% and you getting 1%. You have to have a 620 credit score to get the conventional loan. But that doesn't necessarily, that's just kind of like the height requirement to ride the ride, but it doesn't mean you're going to ride the ride. Okay. Like, you might not get on the ride ever because your credit profile will go through automated system and it'll be like, you could have a 650. The fact is, you are at 60, 90 days late on your mortgage 9 months ago. And since then, you've done nothing. It's kind of like you got that DUI and you're still showing up at the Christmas party drunk. And everyone's going, are you okay? Little different if the minute the DUI happened, your family found out you went into rehab and you came out. And then you got a new job. And every time they saw you, you were looking good. You dating normal people again. Like, you're dating, all these signs of like, whoa. But if you get a DUI and you still date trash and your car shows up, it's got, everything's falling out of it and you can't keep a job for more than a month, people are going to believe you're still in the shit. And so what I'm saying is, like, if you are in that bad credit score place, the only way you're getting out is till you have to personally start a new story here. Otherwise, we got nothing else to remember about you.
Okay. I am literally stealing that analogy next time I work with a buyer. Anyone asks me about credit, I'd be like, let's envision that right now you're in a toxic relationship with your finances and it's going to become your ex and it's going to drag you down. And I can tell the whole story, right? And that made it so real in my mind. I was like, fuck, that's simple to remember.
It's ex, the relationship analogies
drinking,
with you.
Rehab, no rehab, clean car, no clean car, future, no future. Which one are you going to be? Because going to rehab, you can either stay on the rehab path or fall off the wagon and hit the hooch again. And
look, you want people to give you money. I always say to people, like, if you just showed up at my house, knocked on my door, I don't know you from anybody, right? You just knock on my door like, hey, can I borrow 100,000? Even if you were cute. Okay. Even if I had it, I would probably, my first question would probably be like, have you ever borrowed money from anyone before that I could call? Right. And so the credit report is kind of like a money resume. But the thing is that same with relationships. I think, like, if your history has always been to date, not according to you, crazy people, right?
Wackadoodles, yes.
Wackadoodies. Then what happens is after the last crazy one who put you in jail, then the next relationship comes along.
Are you speaking from experience?
No examples, no scenarios. I have no ideas. But what I'm saying is, like, you have got to flip the script, or your family's going to start believing that it's not them that's the crazy doodles. It's you. You have to, same with money. If you have a history of, you've had a collection in the past, you've had lates in the past, you have something that you feel makes you less than stellar financially. If I was to pull up you wouldn't even let me because you'd be a little embarrassed about it. Then I'm talking to you right now. The sooner that you decide that today's a new day and that you are not going to demonstrate any crazies, no crazies anymore. You're going to demonstrate a whole new you. And from this day forward, you're going to put on paper, okay, this credit card that's going to be like your ally. He's coming before you to say he's good for it. Because the score really has one job. It's got to predict whether you're good for it right now in your life. So you paying off your car and paying off every debt that you've had and going, voila, look. And then the score's like, who? Look at who? Because no one's here. Nobody's here. I got nobody to look at because you paid them all off. That's not going to work. But what's open right now? You have to ask yourself, do you have any credit cards right now that would vouch for you?
Yes.
Good. Do you have an installment loan that would vouch for you? Like a car loan, student loan, home loan. You only need one.
Yep.
Okay. And then the credit cards, you really just got to pull up your website or app and look at the last statement that was supposed to go to you. And you probably, opted out to get it. But if you pull up that statement and you look and go, what was the statement balance? What's the statement balance say? Take that number, put it in your calculator, divided by what was the credit limit. So
let's say 10 grand for easy numbers.
Yeah, 100 divided by $1,000 limit.
Oh,
then you're at 10%. Perfect. Somewhere between $1 and 10%, you could put a big gold star on your credit card statement and put it aside. That guy, perfect. Now, what if it wasn't? What if it was 500 out of 1,000? And you're like, oh, gosh, let me look back. Oh, I paid it. Oh, okay. Oh, I paid it off. But the morning the statement closed, I charged $534 for our airline tickets. I could have waited. I could have waited 2 more days and they would have never known that. But now I look like 50% of what I needed, I used.
So let me ask you a question, because a lot of folks, including me, I mean, you dip your toes in this pond every day, all day. You love it. It comes out of you like lava. You just spew, right? Great knowledge. Is there a workaround? Is there a workup sheet that you have that you give to agents or buyers? Because this would be a critical thing when you first have the discussion in an open house or online or wherever you meet the client. Say, hey, I'm going to email you what you should be doing now to be ready to buy the house of your dreams, but we may need a few months to get everything in order on your side financially. Yeah. So let's not go look at homes, because if we do that, and this is actually a line I use. I said, you have to talk to a lender and get approved, because if I show you a home that's 10,000, 100,000 over, 50,000 over what you guys can spend comfortably, then I've done you disservice. So getting you approved at the right number with the best possible credit is going to help you now, but also in the future as well. Because now you have financial health advice, not just financial advice.
It's the long run. It's the long game for me. It's like, I don't want to tell I can give you technical guidance that will get your credit score up quickly and get you on your way. Or I can give you some adaptive guidance that's like big time stuff that you'll implement into your life. And from here on out, that's my goal. If from here on out, you're like, shit, my score went down. I know why, because I missed the day the credit card statement closed. I could have waited, but I didn't, but I'll get it back on track, next month. Right. You just need to know not only who's on your team. I think about it like a football team, but who's on your team, but how can you make each player the best they can be? And that's what I do with my little planner. I've got both a workbook, Greg, and I do the first Thursday of every month. I do a pre-approval class, so that before you have anyone run your credit or have a lender or anything, it's like $20. It's online. It's an hour Zoom, and we get to really dive into getting you prepared to be prepared.
That's something that's hugely important, because going in blind doesn't do you or your clients any good. Mm-hmm. And you know what? Hello, real estate agents. We're a bunch of debt-ridden fools who some of us will work till we're dead because we don't put any retirement money away. We don't really do anything because we're like, oh shit, next credit card bill, I can pay it off with my next one only closing. And then you recycle that mindset. Guess what? You get that same cake you just baked every single month. Yep. It's not a very fun cake to eat. Okay. It's kind of lacking a lot of taste. But so cycling out of that stuff, going into really understanding the pre-approval process to be ready to hit the marketplace. And guys and gals, if you didn't hear the intro to this, obviously Alyssa has a massive following on TikTok. Her tag is going to be "Color My Credit." It is phenomenal. I say this on every show. I listen to her personally because the content, like I'm driving down the road or whatever, and you're just like, holy sheep shit. What did she just say? Damn, there's no backup button. That's where you put a comment. Alyssa, can you back up really quickly talking about now? And then she'll read the comments and get back to it. But I mean, your buyers should be listening to her, not just you. Okay. And if you guys have a lender that you work with, make sure that your lender that you're working with tells you the same thing. Not like, oh, we work for Bank of America. Come on in. We'll get you pre-approved. It's like, great. But is that the best pre-approval? Did you walk me through my financial health, not just my financial pre-approval? I mean, where are you landing on this one, Mr. or Mrs. Lender? I mean,
and it doesn't have to be boring, like I think most of us think of going to finance class, or something like that. It's just like, and believe me, I've been on a lot of dates, I will tell you. And the minute I start talking about credit, because they seem like they're interested, but I can always see it. It's about 2 minutes in, their face starts going. Like what the hell did I just ask her about? Anyway, I'm gonna go like I do some kind of silly something to bring it back. But I will tell you, the people I do know though that dive in, that come into the lives, and we kind of that are pretty dedicated to being there for the conversation, they realize there's so much more to it. And it is kind of interesting. You know what I mean? As far as creatively, the things that we can do. And I also, of course, like for me, it's always the one line that they forgot to mention. It's always the fine print. It's always the yes, but did you know this piece, that really, is super important. But all I have to do is say, I mean, what I want to say is if the easiest way for you to buy a house with no money down is go find yourself a hot veteran and marry him.
Wow.
That's my best option. Do you know any veterans? Could you marry him?
No. I actually do want to know a bunch of veterans. I can make a few phone calls. Oh, well,
no money down on a house? No. Okay. So if you can't find any veterans that you like, the next best is it's really a 3% down loan. As long as one person's a first-time home buyer, that's going to give you the best rates, the best options. But there's, like I said, you got to explore all of them, because I do have that grant program, like I've said, that sometimes works, but there's just so many different creative ways. People don't think about their 401k, and that's a big one that you can go get a loan. And that let's just say that you have a $11,000 balance left on your car, and your car's $500 a month, and your lender's telling you, I can't get you qualified for more than about a $1,500 house payment. And let's say you're in a city where the agent's saying you need to be at 285 minimum. So you need to qualify for $2,000 house payment. And you're like, I got $1,500. That's all I can do for a house. And I got a $500 car payment. Oh, but I have a 401k that has an $11,000 loan. I can use it. I can pay off my car, eliminate the $500 debt. Now I qualify for a $2,000 house payment, because the lender doesn't have to qualify you with that 401k payment. So you can literally like block debt. Okay. Because that payment for the 401k is going to be over 5 years. You're taking, it's your own money. It's the bank of you when you have a 401k. So that's why they don't have to have you counted into your qualifying. Because at any point you could just be like, I'll just take the tax penalty and call it a day, and I don't have to pay you back, or you pay it back and you pay yourself interest every month, which is what, the best way to go. That 401k, if you're getting money, if your employer is saying they're going to match you up to 3% or up to 5%, you better do that full 3%. Don't leave that money back with the employer. And then you can use it in your life, even before retirement. You can use it to get a loan against it and wipe out debt if you need.
But on that matching on your 401k, watch out for your employer, or have your clients watch out. I have a client of mine, and she had them match, and then the industry that she was in, she was changing organizations, and basically the entire company was getting fired because they had assumed, and then they were just killing that brand, right? Well, it's stipulated. She asked them about matching. They're like, "Oh yeah, we're not going to match you anymore." And she's like, "You're legally bound to match me. What are you talking about?" Yeah. Like, no. And so she's like, "Okay, can I have a copy of the contract?" So she went through this thing with a fine-tooth comb, and she found the loophole to get her $6,000 or $10,000 back, because they didn't notify her in writing.
Oh. Yeah.
They just told her, "Oh yeah, we're not going to match you." And so she went back, found it, sent it. She went deep and hard in the paint on this one.
Yeah.
And she dude, like hard. And she got the money. They sent her the money because she was right. So make sure you know what you're signing when it comes to your 401ks and what the payouts are, and how can they screw you on it. Just on a side note, that happened about a couple months ago with a client of mine that I was just like, "What the fuck is going on in the industry?" Jeez.
And think about it, nobody really teaches this stuff, because I've had many times over the years, I've had 20-year-olds that are like, "Oh my gosh, you know how you told me to go, like, just go back through my employers over the last 5 years and make sure that they didn't set up a 401k. Like, I found one." I'm like, right. And then it's like, there's a few $1,000 right there.
Oh, okay. This is a great time to talk about free money. Don't people have free money?
Yes. We love Missing Money. We love the California one because they tell
Yes,
us
we
the
do.
exact dollar figure. In fact, it was Greg and I cracking up last week because there's a little town. I won't name the town in California, but we know all the streets practically. And we went in on Missing Money in California. You basically go to Google and put in California unclaimed properties. The first link that comes up is the actual real from California Department of Revenue money that's being held. It's yours. You just got to go in and claim it. And we went in there and put in just the name of the street name. And it was amazing. I'm like going, uh-oh. And I sent to him like, every person on this street has some money. And you know what Greg loves to do is to go door to door and be like, hi. And I thought, and I didn't have to say anything. I just sent him a copy of the people's names on the street. And he just wrote back like, I got it. I got it. So I just think that there's a lot of great things there. Every time I talk to somebody on the phone who's working on paying debt down or whatever the case, I'm like, have you looked on Missing Money? So definitely check that. Make sure and check your family and friends because you never know, they might share.
By the way, guys, check your past clients. Hell of a fucking good phone call. Hey, Alyssa, it's Greg. Yeah, I'm doing awesome. How are the cats? Oh, they're great. Okay, cool. Hey, you next to a computer? I want to show you something. What's that? Bang, bang, bang. Go to this website, type in your name. I found $2,500. It's yours. It's free. What? Yeah, exactly. We should get together, man. How's life?
Yeah.
Bada boom.
Yeah.
Talk about paying it
This is the time to do it, you guys. I even mentioned a couple times this week too. I spoke to a bunch of loan officers that I do coaching with that are my peers that are great, big producers and stuff. But mentioning to them how many of their clients have been working on their credit that have been qualified for bigger credit cards that don't really understand exactly how to use the points or the miles or anything. And when they go in there and they look in their actual app and they tell their client, like, look it up and tell me what it says the cash value is of your points. And they're like, oh my gosh, I have $460 cash value and we're $400 shy of having our down payment ready. Oh my gosh.
There we go.
Okay. So it's just, you have to document it the right way. But actually, lenders have made announcements over this last 6 months, like we will use credit card points as documented funds for your down payment, as long as you document that you cash them out and that the money and that's okay.
It's so weird. I mean, when you first showed me about the free money, I didn't believe you because you called me up and said, Greg, I found you money. Not only did I find a couple of dollars, guys, I think I found like 5,500 or 5,700.
You found a chunk. Yeah.
I found nearly $6,000. It's 100% me. Mm-hmm. And Alyssa's like, holy shit. So I downloaded it all. I still haven't sent it in. So I got to go send it in. So
I sent mine in immediately that day. And I just got an email. Yes, it was yesterday, the day before, that was like, this is the first 5 that I claimed over the last like 10 years came quick. 2 weeks. I got them. This one is taking a long time. So I'm thinking I got a lot of people that are on that website now and that are all, it's taking a little bit longer, but it's still there. It's kind of like randomly out of nowhere. I just had a brand new one show up. And so I claimed it. And so I'll let you know as soon as I get that money. But I got an email a couple days ago that said 7 to 12 days is when I should hear my response. They had to do something. I don't know. I don't know what it is. I don't even know how much money it is. They don't tell us in most states, but California, they do. So it's nice.
So in the other states, what site should they go to?
Missingmoney.com is the centralized, almost like the search engine site that all the different states subscribe to. Most of the states you'll find on Missing Money. So even if you live in California, but hey, you went to college in Georgia, and then you had this 3 years that you met that guy and you lived in San Francisco or whatever the case. Like you need to look up yourself in other states. And so even if you're in California, go to Missing Money and search yourself on there. Texas has their own, just the same thing, like a Texas, you type in Texas unclaimed property to find their specific site. I do think they do participate with Missing Money, but I think you get a lot more on the Texas only site. Same thing with New York. And I haven't obviously tried every single state out there, but those states are the ones particularly that I was like, But you'll see that when you search right there, you'll put your last name in and all that. Then when it goes to the next page, you'll have the ability to put in a different state right there.
And see, it just pops up just like this. And that's me. Over $100. That's
are
me.
any of them you?
Yeah.
Are they for sure you? Like your address?
Yeah, 1681 Eldorado. That was my first my first condo I bought when I was like 20.
You have to think about it. It's like, gosh, oh yeah, I went to college in Idaho, but I left there 20 years ago. But right. So wouldn't that be probably a place that somebody, if they sent you something, they wouldn't find you? Right.
Yeah.
So that then they'd have to go someplace with it. It doesn't go back to the company. So it goes to the state and the state holds it. Could be your taxes. It could be a variety of things. Another one that's really fun to look at is it's not the same type of good things you get to see, but there's this site called Judy Records, Judy Records. You can practically put in anybody's name and it'll run through court documents. Like if I, whenever I'm going to date somebody, I'm like, and it comes up with their court records, like in every state across the US. And I can meet them at the first date and say, let's talk about Tennessee, 1994.
Oh my God.
I'm the worst person to date. Yeah.
Oh like, my God. Okay, hold on.
Who
so
is
this is the one that you're talking about. Judy Records, right?
Yeah.
I'm not going to put my name in. I'm terrified of that.
It's a little different on the what you get. But yeah, you'll get everything from judgment. I mean, it's good just to see what's out there, because what people don't realize is November 2018, they removed from credit reports, removed from the public records, judgments, tax liens. They're not on credit anymore. So if somebody sues you, you can't go to your credit report to find out that information. But the mortgage lender is going to find it about 2 weeks before closing. They're going to pull up your title and go, by the way, and the thing in Arizona, you can't just sign a paper anymore and get out of it, like through Homestead or whatever. These judgments go, they become liens. And you have to, like, a seller might not even realize they have a judgment. And then they go to pay the house. And you as the agent, you know about the first and second mortgage. What you didn't know is they have 3 judgments from 10 years ago that just got renewed. And those equal $40,000. And that's the remaining amount they need in order to close on the house. Like, they're not going to get any equity. They're going to have to bring a check to closing. That might screw up your closing.
Just a little bit, do you think?
I think so. So the lien understanding. I mean, there was a guy, I think we talked about it on another show, about him having a shed, or they bought the house and it included the shed. And then about a week after closing, somebody showed up and repoed the shed because the shed had a debt, had a lien that wasn't paid. And it was from the last seller. The seller had, like, some of these sheds are big deal, and they had to take out a loan or whatever. They had a lien against it. Well, they came and took their shed.
Seriously.
And it had their house, they had a lot of stuff in the shed, and the people were on vacation and they took it all.
So I'm typing my name in here, right?
Yeah.
I don't know. There's a lot of Greg McDaniels doing some shady shit, dude.
Yeah, you might need to put your middle initial, but that's the thing is like, yeah, and even on
my full name, and there's one here.
You're like, great, what's this? And even missing money, Greg, make sure that you include. Oh, I guess you would never have a maiden name. Never mind. But I was thinking maiden names, like other names. Anyway,
apparently there was a Santa Barbara issue in 2009 with my name attached to it. I'm like, huh?
Yeah.
Like,
I know. It's like, do we really want to go down that road? Let's stick with the missing money.
I'm like, what the shit? I what? And then Indiana, Jasper County, Texas. Jasper County, someone's really pissed off at Gregory Thomas McDaniel.
But you know what is interesting, Greg? How many times over the last 6 months I've gotten calls from people that are like, it's going to be bad. It's taken me almost a couple years to even call you because I know how bad it's going to be. And I'm so embarrassed. And like, I don't want you to think less of me. And I'm like, what are you talking about? And then I'll pull it up and I'm like, you have a 0. And they're like, see? And I'm like, no, 0 means good. It means like you have nothing. You have no open credit, but you don't have any bad credit. You literally don't have any. And they're like, well, but I could keep on getting letters for this collection or whatever. I'm like, it could be a judgment, but it's not on your credit. And even if you were to make payments, even if they start garnishing wages, doesn't impact your credit score. It's not on your credit. So judgments don't, once it's hit it where they sued you and they won, then they get a court order to levy a bank account, to garnish wages. You get anything like that, don't like layer on the crazy with thinking that it's also impacting your scores, because it's not.
Yeah, it's probably a good relief for a lot of folks. Jesus, just the two sites right there. I mean, Judy Records is phenomenal, and then missingmoney.com. What a unique opportunity, one, to clean up your own house. We all got little gremlins hanging around in our closets somewhere when it comes to something about this on some level. But it's just good to know about it, take care of it, move forward in life. It also is fun. Don't look up the Judy Records on your clients. Let them do that, and let the lender do that. That's probably like Paul Stevens. Okay. Holy shit, he's wanted in New Mexico. Oh crap.
I think you should do that. I don't think it's a bad. I do that before I go on a date. I got a whole like it's this long of a background check I do. And I check everything. And then I tell them, mostly I'm the one that tells them for the first time about it. And they go, wait, what do I have? And I'm like, here's where you got to send your check. Here's got to, hopefully you don't get pulled over while we're on a date, because you would be arrested. It'd be fun.
Yeah, really bad. So put that second martini down. Bad.
I'm telling you.
All right, let's wrap it up here, because I don't want to overwhelm people. You especially, and I have a tendency to overwhelm folks with information because we love what we do and we love talking about it, informing other folks. Give me your top couple of takeaways, so folks can then, if they want to go back and rewatch it, they can. But take me down that path of what the most important things are here that we talked about today.
Okay. Number one, to have a pretty good idea. If you don't have a friend that's a lender, come join me at my pre-approval class. It's $20. Yes. It's next Thursday, because I can't tell you how much it can help you and save you a lot to just have a little preparation right before you go in and actually get the pre-approval done. Please, as far as the down payment programs and what's available, just make sure that you are in a state that this program's going to work for you. There's going to be, if you're not in the Midwest, if you are in the California, Arizona, Texas, Florida, New York, like those low down payment programs that they advertise on Facebook, they're really not talking about for you so much. It's that they are available, but you have to fit in the box. So just understand that when you contact the lender, you're going to say, tell me what specific requirements are for this to make sure I'm fully understand. That payment shock alone could be the one ding that could ruin it. You not being able to prove that you can stay within a certain percentage of increase in payment, even if you can handle it, they want some sort of record. So making sure that you just ask questions. And okay, last little thing before you ever go talk to a lender or any of this, please go get a MyFICO account. I don't work for them, but that way you can get the actual real mortgage scores that the mortgage lender will pull. You don't have to have 50 lenders pull your credit and have all these inquiries. You'll get the real scores. You'll get the full report, everything they're going to see. Okay. You'll be able to get, and there's no inquiry. There's no hard hit to your credit. It's like you get all the power. The only sucky thing is you got to pay for it. It's like $30. And if you think you can go anywhere else and get a free score or free anything, or even pay for a score and it be the ones that we use for a mortgage, you'll be wrong. That's MyFICO's it. That's the one place available to the public for mortgage specific scores. Okay. Reports, you can get an annual credit report. But yeah, that would be the most important things is those, what I just said.
Okay. So MyFICO is definitely a good one. Guys, I want you to take a very close look at this very quickly. So when I was looking away, I wasn't being rude. I was actually doing something. You guys never seen it. This is Alyssa's TikTok, Color My Credit, right up here on TikTok. I don't know where I see more. I don't know what you can do here, but that's her right here, followed by 451,000 people.
I can't see
451,000
it. Does it say
people.
how many videos I actually have there? Does it say that?
I don't know.
No.
Fucking shit. 4.6 million likes, 451,000.
I think there's like 7,000 videos there. But if you look at the little playlist down here, stay away from hallway runway. That's me trying to be a model. But debt pinball. I'm a little bit thirsty sometimes. I get a little nuts, but dirty pinball. Debt pinball. Easy as 1, 2, 3. Some of those playlists, the easiest 1, 2, 3 is about building and rebuilding. That's my method for that. Debt pinball is my kind of equivalent debt snowball, getting yourself out of debt. These are good plans to follow.
Maybe I'm just TikTok retarded. Where the hell are you looking?
Right there, right here, like on the, and it says, it's right there.
Here's
right
hallway.
There. That's it.
No.
If you keep like scrolling across, I think you have to like roll them.
It won't do it.
Oh,
but here's the thing, guys. Go up here. Go to the playlist at the top. Big word that says playlist right here. Go to take a look at those. Otherwise, just get in her world, because good effing job, girl. I thought I had a lot of videos.
YouTube's got a lot too. YouTube's got a little bit longer content,
but there's a lot of value there. So go take a look with YouTube and TikTok. So with that, guys, we've been going for just under an hour. We're going to let you guys go. Have a blessed, incredible day. Alyssa, we're going to be back next week. Do you happen to have our subject for next week? So I don't have it directly in front of me. But it is going to be something very interesting. She came up with 10 different titles that are going to be pertinent to you, your clients, the business, the whole 9 yards. And as you guys have seen so far in the last couple of shows we've done, they have been very, very interesting. And hopefully, if you can take these and then get into her world or another agent's world or lender's world, it's going to save you a lot of friggin' time, man. Don't sit there and try to be a mortgage expert, because you're not. I love you, but you're not, unless you've been a mortgage agent as well. Talk to the best. So what's our next topic?
0% auto financing. Is this too good to be true?
Oh my God, I already know the answer to that.
Yeah.
So there it is, guys. 0% auto financing. Alyssa sent me a video about a guy she follows about talking about the mathematical equations for buying or leasing a car. Brilliant. I didn't tell Alyssa this, but I actually gave that to a friend of mine who was debating between buying and leasing a brand spanking new Tesla. Mm-hmm. And so he followed your advice, and he was going to go with an Audi. He then switched over to the Tesla, and he's happier than a pig in mud. So now the equation works. So rock and roll on that one.
Yeah, good stuff. Everybody needs, cars, and even though I don't do car loans, I'm a mortgage girl. Don't think that this isn't going to be a great topic for you in real estate or anywhere, because we all need help with that.
Yeah, no kidding.
Good stuff to know.
All right, guys, if you're just kicking in now, go back and watch the show, or go back another 5 minutes and you hear all the breakout stuff. But Alyssa, you knocked it out of the park as always. Guys and gals, we will be back here next Thursday around 10 o'clock Pacific Standard for our next installment, talking about the 0% car loans. Are they helping or hurting? So we love you. We appreciate you. Until next time, peace out, ninjas. Here we go.